China's aggressive moves are a threat, but even the dragon has an Achilles heel. China's economic growth has hit a 30-year low, 3-0. There is an ocean of bad debt within the Chinese economy, but Xi Jinping will not shelve his Belt and Road plans. The result, Chinese companies are now failing, and it should bother not just China, but the whole world. The Chinese economy is losing steam. Official numbers from Beijing say the Chinese economy expanded by 6.1% in 2019. This is China's worst performance since 1990. The impact of a bitter trade war is showing. America and China have signed an interim trade deal. Beijing says this will help bring the economy back on track.
We can say that this will have a huge benefit on improving economic development expectations for not only China, but also for the US and the whole world. The global economic and trade growth is slowing down. The instability sources and risk points are increasing. The structural, systematic and cyclical problems at home are intertwined, and the economy is faced with mounting downward pressure.
But the trade war is still far from over. Tariffs are still in place for around 2/3 of the goods that America buys from China. But this dispute is only one part of China's problem. Other factors are internal. People are holding on to their cash. Experts say domestic demand is weak. Beijing made some moves to kickstart growth. Tax cuts worth close to $290 billion were announced last year. Provincial governments were allowed to sell a large amount of bonds to fund infrastructure programs. Banks were encouraged to lend more. But these measures have not helped. The economy has not picked up. Some analysts argue that the problem is structural in nature. China's economy has developed at a rapid pace, but an aging population threatens its vitality. Widespread lending is another matter of concern. Years of borrowing has left China's financial system riddled with trillions of dollars worth of debt. A lot of it remains off the books. Chinese regulators have even let some banks fail. But the hidden debt could be a ticking time bomb for the Chinese economy. The United Nations is keeping a close eye on the Chinese economy. A UN report on world economy predicts steady growth for China in the new year, but also cautions against the threat of a debt trap.
We haven't changed our forecast for China very much. It remains around 6% for this year. And we would hope that it does that in a way that retains a reasonably kind of robust growth performance and keeps its relationships, particularly with other developing countries.
If the slowdown continues, China could feel the impact on the Belt and Road Initiative. One estimate says Beijing has invested as much as $8 trillion into its global infrastructure program. And they're pumping more money into it. A prolonged slowdown could cut off the cash supply, as China may run out of resources to invest in projects abroad. If that happens, even the global economy could suffer a blow. Bureau Report, WION World is One.